Should we move on to Decker?
Yeah,
shoes?
let's go to Deckers.
What are they called? Ugg boots?
Ugg boots. Yeah,
boots.
I got a pair of Uggs at
Do
home.
you?
It's a nice little moccasin. It's not like the boots. It's kind of more of a slipper.
See, I'm older. They don't give me good foot support. I need that foot support.
Oh, it's only for home. It's kind of like a home shoe.
I need a good support when I'm at home. So let's look at Deckers. They are obviously in the footwear and accessories industry. Gosh, it was hard to get that out. Short on the float, 6.3%. That's kind of getting up there. 96% institutional owned. Decent PE ratio, 17.2 versus 19.9. Price of sales, 3.3 versus 1.5. That is expensive. Price of book value, 6.1 versus 3.8. That is also high. Price of cash flow, 15 versus 12. So these valuation ratios pretty high, and even there's no PEG ratio, so you can't tell you what you're paying for the future growth of the company. I like that PEG ratio. All the companies we invest in, we always like to look at the PEG ratio because it tells us, are we getting a company on sale or not? Can't tell with Deckers. They have done good on their earnings per share growth last year, up 26.7%, above the industry at 23.6%. Sales did climb by 14.8%. And this is when the footwear industry was actually down 11.2%. But going forward, not so good. I guess you got to buy some more slippers here because they're saying the 5-year earnings per share growth estimate, a negative 1.6, while better than the industry at 28.1. Why would you want to buy a company that's going to have their earnings decline over the next 5 years? Does not make sense to do that. That's why we look at that number. They do not pay a dividend. The balance sheet, pretty liquid here, 3.2 is a current ratio, above the industry at 2.1. That's a lot of liquidity. Debt to equity looks good, 0.1 versus 0.8. So it looks like they really work to manage the balance sheet well. Net profit margin, 19.1 versus 7.7. Return on equity, also very good, 35.8 versus 30.3. Return on invested capital, 32.7 versus 16. So I'm kind of like what I'm saying there. What do you got going forward?
Yeah, current price here for Deckers Outdoor Corporation. Again, their ticker symbol DECK. Deck. It's always kind of. Do they do decks or?
I know you think of the word
shoe
decks when I
company.
say that, right?
You want shoe support or foot support. Don't buy the Uggs. They have that Hoka brand.
Is that from?
It's one of the reasons Deckers really took off. I mean, their stock over the last 5 years is up like 360%.
What's it called? Hookah?
Hoka.
Isn't a hookah like a hookah bar or something?
Hookah bar is tobacco. Hoka's a shoe.
Don't get it mixed up. Yeah.
I don't like the way the Hokas look, but supposedly they're super comfortable, super supportive. So I know that is kind of one of the reasons that the stock really took off a few years ago was the growth of that Hoka name there.
And I'm kind of cheating. Look at the numbers going forward. You're going to give some bad numbers, aren't you?
Yeah, I mean, we'll start here, though, with the current price. 106.02 is the level. 52-week range. The low is $93.72. The high here, $223.98. As I said, it's done really well over the last 5 years, about 359%.
I was talking about the 223. That's a big fall from the top.
Oh, yeah. Last 10 years is up 698%. But year-to-date, the stock is down about 47.8%.
Huge
there was
decline.
a lot of hype, I think, built in, and now it's kind of come back down to reality.
Hey, let's do hype investing. I hear that works pretty well.
All the time. But going forward, you go out to March 2026. They do report on a fiscal basis rather than a calendar year. Estimated earnings per share, $6.61. That does give us a target sell price of $109.73. So right around that current level, not really a buy necessarily. And I'm kind of surprised by that 5-year estimated growth rate because this year they're looking for growth at 21%. Next year, growth at 12%. 2027, less analysts, but 13%. So weird to have that much a differing opinion between that 5-year growth. And then I just gave 3 years worth of growth, all pretty strong numbers there. The last thing I wanted to say about this stock that is intriguing is they actually had a big sell-off on the first day of the tariff announcement on Thursday. It looks like they have 68 supply chain partners in Vietnam and then 125 suppliers in China. So it looks like they have a heavy concentration there, which is why I'm kind of surprised. It was actually up 5% on Friday. I think probably because of that Vietnam news.
This Friday yesterday?
Yeah.
Really?
Mm-hmm. Yeah. And it was down a lot on Thursday. And I bet you it was down a lot at the beginning of Friday. But then when Vietnam came out, since they have a presence there, it looks like this stock turned around. I know Nike did the same thing as well because they have a presence in Vietnam.
And I was wondering if because maybe they talked on Friday about moving more of their manufacturing from China, maybe to Vietnam or something, and
Maybe they have the capacity there and it'd be an easy transition. I don't know, but I'll tell you, I don't like the stock. I don't think it's relatively priced as a great opportunity considering where we're at in this whole trade war situation. I mean, to still trade right around that 16, 17 times earnings, I don't think that's worth the risk.
And this is where you want to talk about people say, well, buy what you know. Oh, I love Deckers. I love the UGG boots. I'm going to buy the stock. No, you can start there, but you've got to look at these numbers we look at because it might be a great slipper, great boot, whatever. But if they can't make good profits and grow those profits, buy more slippers, more shoes, but don't buy the stock.
I mean, we talked about with Nike, was that last week, 2 weeks ago? There's just so much competition in this space. I mean, I talked about the On Clouds. You don't know what that is, but that's my favorite kind of shoe. We talked about Nike, Adidas, Under Armour. I mean, Under Armour used to be such a great, company that people were intrigued by. Nobody talks about Under Armour anymore. I mean, there's so much competition in the shoe business. I'd be scared to invest, I think, in any company almost.
And what was that? 2-3 weeks ago, we talked about Crocs.
Yeah, Crocs.
And
I mean, those numbers look good.
Yeah, those look good. I'm thinking haven't added to our watch list yet. I'm thinking, should we do that? But I mean, those numbers look pretty good on Crocs, and I don't like the look of the shoes. But they had what was that shoe that they?
Hey Dude.
Hey Dude shoes. I know. I just love the Hey. And somebody sent me an email. Hey, did you get those Hey Dude shoes yet? No, not yet.
I just the footwear space, it scares me. We just mentioned so many competitors there, and the barriers to entry don't seem that difficult.
Yeah. So I'm gonna pass on Deckers. Again, maybe give a re-emphasizing look at Crocs.
Yeah.
Maybe, even though I don't like the look of their regular shoes.